If you've never thrown a deal in the trash because it looked too weird, congrats, you're a unicorn. We have a big day today. If you're ready to close more loans, keep more clients, buckle up because you're about to learn how with our friends at Newfi. Now, many of you know I've been in the mortgage business for 20 plus years, and I believe that many loan officers, well, they toss out anything that doesn't fit that perfect W-2 box. But the reality is that there's a whole nother world out there. There's a whole nother lane, and it's called non-QM. All right. Many of you have heard of it. So today we're going to be hanging out with Logan and KT from Newfi. Yes, there's another KT in the mortgage industry. I can't believe it either, but here we are. But they are definitely hands down some of the best account executives in the non-QM world. They both know how to turn these, non-QM files, no-shot files into closed commissions. So we're going to be talking non-QM today. And yeah, I get it. Guys, I get it. It sounds boring. It does, until you realize you probably threw 3 deals away just last month that you could have gotten closed. Okay, Newfi, they're not here just to sling products to you. They're solving real problems that pop up every single day in our business. And so, you know who I'm talking about. We're talking about those files, the borrowers that are self-employed, the borrowers that are outside the box who, haven't filed taxes in maybe 2 years. They have funky income, and they make underwriters sweat, right? And so those are the deals I'm talking about. So this interview is going to be, talking about those types of deals. Okay. So you're not leaving money on the table, and you're not leaving these types of clients hanging. Okay. So without further ado, hello, Logan and Kathleen. Welcome, my friends.
Thank you.
Thank you for having us.
That's awesome. So tell us a little bit, like give me like Newfi's, 30-second commercial. Like, what are you guys really good at? What sets you guys apart from the competition? Then we're going to kind of jump in because I just feel like there's a lot of non-QM products out there.
Mm-hmm.
At the same time, I don't think that all non-QM products are the same. They have the same name, but they're not all equal. Is that fair?
Yeah.
So anyway, I'll let whoever wants to go first go.
I'll jump in first. Is that cool? Yeah. And hi, I'm KT I'm based in Seattle, Washington. And I would say for what sets Newfi apart, I've been doing this since the late 90s. And I worked actually for the owners of Newfi, the predecessor company at that time. So the thing that sets us apart is that we've been doing these kind of loans for a really long time. We super understand them. Before the crash in 2008, if any of you have been doing this long enough, we used to call this Alt A. And that was a whole kind of world of loans that went away. And then it came back as non-QM. So because we have a long history with them, we really understand them. And our ability to listen to the story, to understand what are the good things about the file, to understand the whole picture and make that decision based on all of that information, I think is really what sets us apart. I mean, non-QM, like, you can work with a million different lenders. It's all about who you trust and who's going to get the deal done for you at the end of the day. And that's, I think, what sets us apart.
Absolutely. Logan, what's the craziest file that you've ever gotten approved going non-QM? And I'll share one real quick. I had a guy that was a YouTube superstar. He didn't file taxes for 2 years, went to 5 lenders. They all told him no. He came to me. I even thought, I don't know if I can do this, but I'll try non-QM. And we were able to get them closed. Now we had to do some, we had to get some CPA documentation, and he had to do a little bit of work. But at the end of the day, we got it done after he got 5 no's. And this is a YouTube superstar. A lot of people might know him. He had like 3 million followers, over 3 million followers. But he was a great example of somebody that I didn't even think that could be done until we closed it. So do you have any story like that?
Man, where do I start? One that comes to mind is, I'll keep it super short and simple, high level here. But I mean, around 50 acres of a property, split parcel, had a farm on one side. We had to split it off. I mean, and he was self-employed and he wrote everything off. So, I mean, there's just so many layers to a lot of these loans. And, and we got it done. One thing I do like telling people when, you're talking about the non-QM world is you owe it to your borrower to exhaust all options, right? You really do. So I came from agency land. I get it. Conventional FHA, VA.
Yeah.
If it doesn't fit inside the box, it's so easy. as an originator to say, I'm sorry, I can't help you. But you really owe it to your borrower to really exhaust all options and check in with different people at lenders. And sometimes the non-QM world will fit.
Yeah, I agree. Kathleen, let me ask you a question, okay? Tell me about a deal that a broker thought was dead until Newfi was able to look at it. Can you think of one?
Yeah, I can think of a couple. One recently that was a beautiful loan, 85% jumbo, is a $1.8 million loan amount. And the borrower was a software engineer, and he was full-time with 2 different jobs. And that you see that a lot when they're working from home. It's not that uncommon. And they got turned down on a conforming lender, like beautiful credit. It was 20 months of 2 jobs, 1 job for many months. And we were able to, so this is earnest money on the line, 10 days from closing. We were able to pick that loan up and no problem using full income from both loans to turn it around and get it closed and meet that escrow date. So not a crazy wild one with a farm and a bunch of acreage, but that's something you see all the time. Borrowers are grinding right now, and they're cobbling together 2 different jobs, 1.5 jobs, a little side gig. So really being able to give them full credit for everything is super valuable right now.
Yeah. So I want to ask Logan, this is for you. Okay. And I just want to be transparent because and this is KT opinion, like me, KT, not you, Kathleen, but I just feel like there's a lot of loan officers out there, Logan, that don't realize that these types of loans are fundable, or these types of loans are fundable. I know that when I started getting back into non-QM mortgages and they started becoming more, I guess, prevalent in our industry and more, because it seemed like after the subprime crashed, we didn't see them for a long time. Now they're back. I think just in the last year, non-QMs probably became, I would say 25 to 30% of my business. So how many loan officers do you feel that don't realize that these are fundable deals? Like how many?
Yeah, a ton. And, a lot of times it's not even their fault. Maybe the company they work for, the brokerage they work for doesn't do non-QM themselves. So maybe people on their team aren't really pushing it just because they don't know what they don't know yet. Right. And one thing I always tell people when they're getting introduced to the non-QM world is regarding the loan itself, the structure, really the 1003, the credit report, the appraisal and title are going to be the exact same as a conventional loan for the most part. The only thing that's typically looked at differently with a more open mind is their income piece of it. And that's kind of a blanket statement. It doesn't apply to every non-QM scenario, but me as an LO coming in and being like, ooh, it's a little intimidating. I don't really want to do non-QM. I don't want to ruin a realtor relationship. It's pretty much still a loan. A loan is a loan. We still look for a well-qualified person, but a non-QM lender is going to look at it with a more open mind versus Fannie, Freddie, or Ginnie.
Yeah. You said something too there. It says that loan officers don't want to ruin a relationship, right? Well, if you set proper expectations up front, and let them know, hey, this might be a little clunky. It might be, I'm not going to traditional financing. I'm going to have to use one of my non-QM lending partners. And you reset those expectations and you say, hey, it may be a 45-day, maybe even a 60-day closing time frame. And I know some of my non-QMs I've gotten done in 30 days, right? So they happen, but you see my point there? It's like, I hear that often too. Well, I don't want to ruin a realtor relationship. Well, if they go down the street, it's a guy like me, and this guy's been told 5 times, you're going to lose that realtor relationship because another broker was able to get it done, right? And so I don't always think that that's a great way of being or thinking when it comes to non-QM lending. Would you agree?
Oh yeah. If you're not going to do the non-QM loan for them, you bet somebody else will do it.
Dang right. Yeah. Well, if I was to send, if I sent Newfi, Kathleen, if I sent y'all 10 turndowns, right? Like from traditional types of financing, how many of those do you think actually would get done? Because I think that's a fear that loan officers genuinely have when dealing with non-QM. So, well, they just, it's not going to happen, So I'm just curious what you think.
I mean, obviously it depends on the specifics, but I would say like 7 or 8 out of 10, probably there's a way to do it. And what I would say that's so important is like, we've gotten so used to AUS and the simple, like only provide the information that's required by the findings. But in this non-QM space, we really want to know the whole picture. So the reason we can get 8 out of 10 done is because I'm going to ask you a ton of questions about the file that you maybe haven't thought about to find another avenue to come at it. And so that's I think a big part of our success is really looking at the whole picture and finding just the solution pieces that we need to structure the deal.
Yeah. Yeah. So, and this kind of goes back a little bit, Logan, to what we were just talking about. It's like loan officer superpower, right? I like to lead with non-QM products, believe it or not, in a lot of my marketing efforts, because it's like this superpower. And when I'm able to say I have these things and these resources and these loan programs and these outside the box things, it's just like, anytime a realtor hears anything that's outside the box that even might fit traditional, they refer it to me anyway. So I really want loan officers to look at non-QM as a superpower. Okay. It's a value add to our brands, right? And are there any other ways that, being a good, like anything that you would tell a loan officer about being a good non-QM to make them more referable? Is there something you could tell them to be more referable?
Yeah, absolutely. One, keep an open mind. And two, it's funny, referral partners, such a big piece of our business, right? Especially if you're not buying leads. A lot of loan officers are relying on those referral partners to bring in new business. So everybody's going after the realtors, the builders, the title companies. Usually when I'm giving presentations about Newfi and non-QM, I tell them to to target a couple different specific types of referral partners. Hard money lenders. If you can get in good as an LO with the hard money lender and help them find permanent financing for their hard money loan, they want to get paid off, and that borrower wants better terms, secured long-term financing. So seek hard money lenders on Facebook, in your community, and on other social media platforms. And then specifically for non-QM, if you can get in close with a CPA, a CPA has a whole book of self-employed borrowers business that you can potentially target and maybe set up some type of partnership with them. So expand your referral partner business in your way of thinking. Don't just go after the realtors and the title companies.
Yeah, I love that, man. I was going to say that, like, expand your mindset, like think bigger, instead of outside that traditional form of financing. KT, I always want to say that. I got to say it finally.
Yeah.
All right. Do you think that there's, is there a non-QM niche that loan officers should own in their market?
Yeah, that is a great question. And it depends, where they are, if there's something specific, right? Like we see here in Florida, there's a lot of STR, a lot of short-term rental activity. And we do a lot with that on our DSCR product. There's also a lot of condo issues there. So it's something to become kind of the expert in who can do what and where to place that. I'm up in Seattle, so I have a lot of tech workers. I see a lot of RSU income, right? And being really creative with how to attach that. And then in the metropolitan areas, a lot of ADUs, trying to increase zoning in cities. People are getting creative about getting more income on their primary residence and adding ADUs. So we do a lot of that business that can be a hard stop for conventional lenders. So it depends on the specifics of your market. Logan talked about acreage in some markets, and we're really comfortable with that in a lot of places. So what is unique about where are the borrowers running into the hard stops where you are, figure that out. And then finding the solution for them is really what will set you apart. Yeah.
I think that's a great answer. I think that, it depends on your market. What do you think the top three, non-QM niche products that you guys offer that you see, more loan officers using? Like what would those top three be?
Logan, you want to take, or you want me?
Yeah. Would it be would it be a bank statement loan? Would it be like a 1099 loan and a self-employed loan? And do y'all have different layers of that?
Yeah. I think the three heavy hitters are going to be agency fallout. Okay. So you can't go conventional or FHA for whatever reason. Number two will be bank statements. And then number three will be DSCR.
Okay. Yeah. And when you say agency fallout, you're talking really an A paper loan that just barely falls off and is just right there on that line. But what I've noticed too with some of the non-QM lenders, and I'd like your feedback on this, is it seems that those have got pretty competitive rates tied to them.
Yeah. Oh, yeah.
It's insane. It's like as good, if not better than the agency.
Yeah, if you have a lower LTV, good credit score, you're going to be neck and neck with agency, believe it or not, especially on DSCR, which we haven't really talked about, but DSCR is only for investment properties. I mean, you're right there with agency all day.
Yeah. Now you just brought up DSCR. Do you feel like that's a growing, sector for you guys? Because I know that I feel like for me, it's one of the most exciting non-QM products that I've been offering clients. I have struggled a little bit trying to figure out a way to reach out to those people I'm in a small rural country community, but there's still people out there. So it's a little different for me, but is that something you guys feel is growing in the market as well, even for you or for Newfi?
Yeah, absolutely. I think that about 40% of our business right now is DSCR, so it's a really strong percentage, and we've gotten really comfortable with it. Then one of the nice things about DSCR is usually this type of client who's going to be an investor client, they may have multiple properties. So it's not just one borrower buying one home, right? It's one borrower leveraging their capital into multiple properties. And we see a lot of people moving into the smaller markets that are a little more affordable and cash flow very nicely, and then buying multiple properties there, right? So maybe they live in California, but they're going to buy in Indiana or somewhere else in the country where it's a little bit more affordable. So we're seeing a lot of growth in those DSCR programs.
I agree. I totally agree. So let me ask another question. Do you guys have any data on like how many, what the percentage is of clients that are no longer clean W-2 people? Okay. So that's one question. And do you think that and the second question would be, do you think loan officers should, and Logan, you hit on it a little bit, but do you think that loan officers should be marketing these 1099 people intentionally? And I think you answered some of that already, Logan, but I just wanted more feedback on that.
Yeah. The data specifically, man, I don't get paid enough to get the reports on those ones. I'm sure some people in my company have that, but marketing, absolutely. I mean, as salespeople, what we're always trying to do is trying to find a foot in the door. Really, your job as a salesperson comes down to one thing, and it's starting a conversation and getting a response when you're marketing. That's all you're doing. So what I'll do personally is I market our niche products. I market 1099 loans. I market DSCR, bank statement, et cetera. All I'm trying to do is initiate conversation, get eyeballs on it, and get a response. And that is huge. When every LO is marketing kind of the same things, hey, our rates are so good, conventional FHA, you want to stand out. You really do. And not every LO is marketing those non-QM scenarios right now. They're just not. Right. It's going to make you stand out,
Yeah. It's such a good point too, because, loan officers, they've struggled, man. We all have struggled in 3 years, and business is obviously picking up for a lot of people, but you eat what you kill in our business. And sometimes, that low hanging fruit, I think that we got stuck in that low hanging fruit, and we were just walking by trees, picking the low hanging fruit. Now I'm like, hey, bro, you got to climb up the tree. There's fruit up there. You just got to go get it. You got to put in the work. You got to take the steps necessary to be more successful. But I think with the non-QM products that's coming out, it's definitely something that's on my personal radar to get a bigger market share. And like I said, it's probably a good solid, it's not a lot of times with our clients, it's not no, it's usually how we're going to get this thing approved. It's very rare that we're telling people no. But
one thing that I'll say too, Kenneth, not to cut you off here.
Yeah.
Sometimes you'll even be marketing a non-QM scenario, and you'll get maybe a realtor or a borrower interested, and it fits conventional, and that's fine. That is completely fine. If a loan officer partner of mine brings something to me and it fits inside a conventional box, I'll say, hey, who do you use for a conventional lender? Go send it to them. This one seems like it's going to fit in that box. But the marketing piece of it's to drive conversation and really help grow your book of business.
Yeah, I think so as well. Kathleen, do you have any non-QM tricks that brokers don't realize they can use?
One that I've been using a lot lately that I love is to use IRA distributions as a new source of income. A lot of times buyers are not quite reaching the DTI threshold, or I've had people recently retired young, 40s, 50s, right? They're not tapping into Social Security and full retirement yet. So we will use unage restricted. We will use IRA funds basically divided by 36 for new income. We don't even have to show a distribution setup. That's a really nice little income loophole. You do take a 10% haircut for early withdrawal penalty when they're less than 59 and a half. But all you need to do is show that they have that money in an IRA, and we can basically, divide by 36 and give them income. That's a really nice tool to combine with bank statements or full doc, or even just as a sole source of income. So I'm seeing a lot of that one lately. The other one that I really like in ours in the non-QM space is we only need 1 year of self-employment. I've done several restaurant operators with just 1 year of self-employment, which is like the riskiest business. I think the fail rate is like 90-something%. But if you've got 1 year of solid deposits, we can do a bank statement loan to 90% on a new restaurant operator, which is really nice. You think, oh, you just got to wait 2 years, you got to file tax returns. You don't have to. Let's talk about it a little bit more.
Yeah, I love these conversations. I geek out on it, but they're fun, right? This is such good information. I'm sitting here thinking, I think I talked to someone about that recently, so that's great. Well, let's play a game if you guys are good with it. I want to call it dead deal or closed loan, right? And I'm just going to rapid fire these real quick, okay? So we have a bartender that switched to freelance marketing since 6 months ago. Is that a deal? Dead deal?
Is there still bartending? It's probably 6 months only is going to be a tough one. We need 12 months. So come back in 6 months. All
right. All right. So we got a self-employed borrower, 18 months self-employed, filed his 23 tax returns, but not 24.
Green light.
Yeah.
Green light. I love it.
Oh,
okay.
Yeah.
All right. So we talked about Florida. So a non-warrantable condo in Florida with a lot of Airbnb traffic.
Generally, yes. Non-warrantable condo, probably not high LTV, but yeah.
Right. Yeah. What is the LTV on that, you think?
I mean, not 90, 85 on a primary, probably with a bunch of Airbnb, it's a non-owner. So 75 or 80 would be safer.
Yeah. Okay.
Yeah.
Now I want to say something because we're going to wrap up the call here in just a moment. I want to say something. I've worked with Newfi. Okay. And y'all got a gal that works for you. She's an account rep, Michelle McBride, dear friend of mine. I've known her since 2003 when I got into the business. Wonderful person. And what I've noticed about Newfi is y'all have some really solid communication tools and technology. It's really user-friendly for the originator, right? Am I right on that?
Yeah.
The experience of it was just like, man, these guys are like on it. And we closed one with you recently, and we did very little work. You guys took so much of the heavy lifting off of my team's plate. And, and everyone has, like, we have bad deals with every lender that's in existence. There's no perfect lender. And this is what I tell people. I don't want realtors judging me off of one bad deal, right? Because maybe we dropped the ball or something that goes we expected. And I sure the heck don't want loan officers treating our lender partners like realtors treat us sometimes, right? It's always like to bring that point up is like, man, don't treat your, so I don't like judging people off of one deal. I've never been that way. My team's not that way. And so every lender, has challenging deals. You guys have been fabulous for us. And I want to say that, look, organically and real and with authenticity, and it's y'all been great. And so I know as, lending partner side of AIME, I certainly appreciate all that you guys do. So in closing, is there anything that you want to say about how awesome you guys are at Newfi? Somebody wants to get, because there's people watching this that aren't signed up with you. Like let's go,
Sure. Yeah. And I mean, this is what I'll say. And, you can always bring us a scenario. You can bring us a deal. We're going to be honest with you. We're going to tell you up front if we can do it or not. That's huge. As a loan officer, you got to get a yes or no answer as quickly as you can. There's no point in stringing you along, bringing the loan in, registering it, and then 2 weeks into the process, it's a dead deal, right? It's not cool for anybody, especially the borrower and especially your referral partners. So we got to give an answer up front. We have pretty much direct access to our head of credit risk. We can get an answer within the hour, guaranteed. He's always available. Awesome. That's huge. And then the last thing, I've already said it, your borrower deserves to really have all options exhausted. You owe it to them.
That's awesome. Well, thank you guys so much. And listen, we appreciate you guys more than you know, right? A lot of what Newfi does for AIME and the lending community is second to none. And I believe that. And so we appreciate you guys' partnership very much. And thanks for being helpful and knowledgeable and, you know, having fun with us. So thank you so much.
Yeah, thank you.
Thanks very much.